tal todos? Bienvenidos al segundo día de MadBitcoin. Good morning. Welcome everybody to the second day of MadBitcoin. And it's mad because, well, you have to be a little mad to be involved in Bitcoin. And to be here so early. Thank you for joining us today. But we have a wonderful panel this morning. So let me talk to you a little bit about the panel today. So it's called Building Generational Wealth on Bitcoin, Strategies for Family Offices and Institutions. Your moderator this morning is going to be Alberto Mera. He's a host at Un Podcast sobre Bitcoin, respected Spanish language Bitcoin educator and interviewer. His podcast has built a large engaged community across Spain and Latin America. He's a regular speaker at Bitcoin conferences, and from 2025 also co-hosted on MadBitcoin Podcast together with Aldona. The panelists for this morning are Richard Byworth, a board member at Relai, an advisor at Jan3, Rony Vogel, the CEO of Vogel Family Office, Sasa Jovanovic, the Bitcoin instructor for Monaco Asset Management, and Quim, Allard, co-founder and CEO of IQANA. So please give them a warm welcome.
It's very difficult. Hello. Bueno, buenos días a todos. Vamos a tener un panel interesante con 4 grandes invitados. Son personas cada una con una experiencia diferente en relación a Bitcoin y en relación a lo que hemos vivido con este activo los últimos años, pero los 4 perfiles al final han acabado haciendo cosas similares en family offices y endeavors parecidos. I'm going to move now to English so we can continue with the conversation with them. But I just wanted to say, again, hi to all of you. And after this brief introduction, let me just go over each of them. So we already have Rich, Rony, Sasa. I'm now very afraid to say his name because it's very difficult to pronounce apparently. And then we also have Quim. That's an easy one. So we're going to be discussing about family offices and investing in Bitcoin for the future and the different ways that we have to do so at the moment, and also the different ways that institutional investors have to go about the investment in Bitcoin. So let's start maybe with an open question for all of you, so we can maybe hear all of you a little bit. What is your position on this? But we all know here what the price of Bitcoin is today, and we know what the price of Bitcoin was a few months ago, where it was a bit higher. And I just wonder, what do you feel about the cycle, the famous cycle of Bitcoin, when you go about discussing the investment of Bitcoin with your investors or clients or institutional contacts? Anyone?
Well, I had a lunch yesterday with a large family office here in Spain, and he asked me the question they always ask is, where are we going? And for me, it's always about the demand side. Obviously, we know the supply side of Bitcoin is very limited. In fact, the only asset that is limited in this way on the planet. And the point I made to him is that, with Jan3, we do a lot of advisory work with nation states. So we are speaking to a number of nation states about things like energy infrastructure build to free themselves from IMF debt. They can issue BIT bonds to build out energy infrastructure, and then they always have an immediate demand from Bitcoin mining. So this is one element, and so I can tell you, I've been working with Jan3 now for 2 years. The amount of conversations we're having with nation states is exponential to when I first started working with them. So we're working with countries across Latin America, Middle Asia, Africa, and even Eastern Europe. So it's really exponential in that regard, and obviously a lot of the work I do is in the Bitcoin treasury space, and I think everyone's aware of what's happening with STRC for strategy and with Sasa for Strive. We're getting to a point where Saylor's able to buy, on occasion, in a single week, 50,000 Bitcoin. Now that's just not sustainable in obviously the supply dynamics that you have with Bitcoin. So when you put that together, and obviously, you know, the work we all do in trying to orange pill families and individuals, you know, slowly as we get more successful, that demand is always just going up and to the right. And so I think, you know, you can only see this going on for so long. I commented on it the other day. It was funny because Peter Schiff had made the comment, this can't keep going on like this. And I said, yes, Peter, you're absolutely right. It can't. We have to go up. And Saylor can't be taking out this much supply continuously. So when you take those three factors together, it's pretty obvious. And I think the amount of bearishness that we're seeing in the market right now, you know, last year everyone was calling for 250, 300,000 this year. And I think now everybody's re-revising those targets down. That's when we're going to go to those levels, I think.
Rony?
Good morning, everybody. My name is Rony Vogel. I'm running the Vogel family office. I would like to start the conversation a little bit more
Family history?
Sorry?
A bit of family history? A bit of family history?
Yes, exactly. That's the point. That's why I want to show you just one picture. That picture is my family 3 generations ago, before the First World War. And since the First World War in Germany, a lot has happened. Some of you know, some might know, and some have experienced the traumatic effects of a war and of a post-war situation. In Germany, we had the Weimar Republic. We had the third, you know, Third Reich, as we say, with Hitler, then the Second World War, and so forth. My family was exposed to all those, you know, expropriation, leaving the homelands, starting fresh again, getting expropriated, gold prohibition, theft, you know, all of that. And for some reason, you know, I have the feeling, not only the feeling, it's my grandfathers and ancestors kicking my butt to, you know, bring our family back where we were. And then I came across Bitcoin 2010-11. I didn't really grasp it fully, but since then I'm studying it. And only 3 years ago, we converting our family assets, namely real estate, tech companies, into Bitcoin. Talking about cycles, for us, it's not important. We have a long-term view, looking into generational wealth. My responsibility is to pass it on to my children and their grandchildren and so forth. So a cycle is a chance, a down cycle. When it's up, we're happy. When we're down, we're happy. So once you understand Bitcoin, you study it hard, you know, then of course you're always fine. And the numbers are not playing a role. The self-sovereignty and the fact that a family of 4, like my friends in Iran, can leave Iran with remembering 3 words in their mind is already a pristine quality property of Bitcoin. Even if Bitcoin would stay where it is, already that is so important in those very uncertain times.
Thank you. What do you think, Sasa, of the cycle? Because they don't seem to believe in it anymore.
Yes, it's a very interesting topic. I'm Sasha Jovanovic. I'm based in Monaco. Just as a background, I spent the last 10 years between private banking, multifamily offices, and asset manager across Geneva and Monaco. So I came from a very regulated world, and I've seen how wealthy families think differently from retail investors. So in terms of cycles, the psychology remains the same, but the cycle still matters because markets remain very emotional and very market sensitive, which is a big issue and also for volatility. But structurally, Bitcoin is evolving with ETF flows and sovereign interests and institutional adoption, which is helping reducing the volatility and maybe one day get rid of the cycles. In terms of retail investors, they focus on a 6-month period of time, so they are more traders. And this is something important for them. But family offices like Rony and Richard said, they think long term. So they think in 20 years of time in terms of timeline. And lastly, institutional capital and geopolitical tensions are changing Bitcoin behavior permanently and daily. And this is something we need to navigate as former traditional finance player and digital assets players.
Okay, Quim, I think your take is going to be a bit different, but I'm not sure.
Well, I think that the 4-year cycle, in my opinion, is dead as we knew it. Generally, crypto and Bitcoin was a market mostly driven by retail and speculation. And right now is a market where institutions are really going in, where family offices, asset managers are stepping their way in, and they're having very different time horizons. They're looking to hold the asset for decades. So when you see those types of players entering, and clearly, as Richard said, we are going to face a supply shock very soon, I think, with the institutional demand we are seeing. So I think that the 4-year cycle doesn't make any sense anymore. It's more like a trading approach. And right now we are seeing those families looking to have some hedge really for the next 30 years. And I think this is really changing the market structure and how it will behave. Of course, the halving will have an impact, but it will already priced in. Everyone knows about halving. Maybe 5, 8, 10 years ago, it was still surprising people when it was arriving, but now people will be anticipating it. So I don't really think this is what will drive the cycle. It will be much more driven by flows, and especially also ETFs or something that have been really paving the way of how the market is moving, and especially macro and liquidity cycles are the thing that is going to drive Bitcoin price action, I'd say.
Okay, well, Kim mentioned ETFs, and of course we have ETFs, we have MSTR and other different companies that also sell shares that are basically backed by Bitcoin, or in a way give you exposure to the asset, and we have other ways to expose a portfolio to Bitcoin, which is not just buying Bitcoin outright. So I wonder, like, let's make a scenario here where you know a person, they run a family office, they have, I don't know, maybe 100 million to invest in Bitcoin, and they already know that they like Bitcoin because you've already sold them on that, and now they have to decide how to make that position in Bitcoin. Because now we have different flavors of Bitcoin or different ways to get exposure to the asset. So how would any of you recommend it? Like just Bitcoin outright and self-custody, or maybe go for ETFs, maybe go for MSTR, maybe go for a mix of ways to get exposure to the asset. Anyone? Maybe Rich?
Well, I had this conversation last week. So I was sitting with someone who they've got to the point of understanding that they need a significant amount of Bitcoin. And so then it becomes Bitcoin is your capital pool, right? So how do you, to that point, allocate the Bitcoin? And that comes with different, sort of considerations depending on the family office. Do they want to hold it in self-custody themselves? Do they want to have it in ETF? Do they actually want to go to a custodian? And there's a custodian credit question, which Rony and I were discussing the other day. It's like, I'm in Switzerland, so everyone's like, oh, Swiss, great quality. You should go with a Swiss custodian. It's like, well, no, because the credit quality is just not the same as you're going to have with like a Coinbase, right? So there's these considerations that you have to have in each of the different pools, and so it depends entirely. I mean, everybody here knows when you're speaking to a family office, it just varies depending on who you're talking to in terms of their risk profile. So when I look at that Bitcoin capital pool, like it can range from a portion in self-custody, so each of the family members might have access to that themselves. There's a family I work with, they have flats in different weird jurisdictions like Cambodia, Thailand, Costa Rica, and so they have books in the bookshelf with the words circled so that the family members know where to, find the Bitcoin that's self-custodied. Then, of course, you have less technical families that want it in a custodian. And then, of course, something like our fund, which is a different approach to sort of taking yield out of Bitcoin, so using different hedge fund strategies to allocate to Bitcoin. And so, you might see a family go anything from 10 to 30% in a fund like that. And then, of course, there's the Bitcoin treasury companies, which is obviously that sort of, you've got that embedded carry trade to the upside. So you sort of expect upside volatility sort of increased performance with those companies as well. So what I try to explain to families is it's a capital pool that you can allocate across those various different avenues.
Anyone here has like some experience? Like maybe Rony, you can explain how did you go about this process?
Yeah, let me share something a bit more personal. I think it's, we amongst Bitcoiners here, I guess most of you are Bitcoiners, so let's be a bit more practical. I mean, thanks very much for the outlaying what is possible. The way we are doing it is we have indeed for each family member an own wallet, and of course according to their age, whether it's, a 15, 18, 24-year-old child, or my cousins or brothers and sisters and stuff. We have different volumes set. I do the education, how to handle that. But the main family wealth in terms of Bitcoin is indeed sitting in Switzerland and Swiss vaults. I still believe Switzerland is, even though the security, you convinced me on that topic with regards to Coinbase, but it's sitting in a Swiss jurisdiction. And I believe as long as Switzerland is, held up like today, we can still trust Switzerland. If Switzerland is somehow, getting into problems with the world is really having problems, I believe. So we're trusting Switzerland, but at the same time, it's wise to allocate your life a little bit or spread your life around different jurisdictions. We live in South Africa. The family office is in Cyprus. The custody is mainly in Switzerland. And I have a German citizenship, and I'm applying for another citizenship. And, through that, you can maintain pretty much a libertarian view and some sort of freedom. Yeah, I'm open to any further questions after this.
Thank you, Rony. Concerning myself, after years working with more than 20 very wealthy families across Geneva and Monaco, I understood one thing. Operational risk is more important than investment risks. Why? Because 10 years ago, when I was one of the first family officers putting financial product in portfolio in Switzerland, there were no such options like today. Back in the time, we had, of course, direct Bitcoin exposure, but it was very tough as financial institutions to get exposure on this side. But we had, at this time, trackers that just follow the price of Bitcoin, and this was one of the first way to diversify into Bitcoin. But what is happening today, we have ETFs that brings us liquidity, reporting simplicity, and institutional compliance. For a family office, it's the best and easiest way to approach Bitcoin as a first stage. Then I think direct custody with multi-sig provides true sovereignty and long-term security. With what we are seeing today in modern world, the monetary debasement, the huge debt expansion makes it difficult to navigate, and that's why there is also more risky ways that I call it risky. It's for treasury companies like Strategy and like Capital B, and we have the chance to have the French Michael Saylor here in the event, and most of it I wanted to thank you, Aldona, to being able to make such a great event and such quality people, but to come back on the topic. I mean, I think we need to have a diversified and layered approach, meaning that, of course, if possible, we need direct exposure and ETFs and leveraged, let's say leveraged treasury companies. And of course, also sometimes it's interesting to think about structured products that bring, of course, Bitcoin, but they can bring multi-layer of Bitcoin, meaning ETFs, a basket of ETFs, a basket of shares, companies, treasuries in Europe, in the US, to have a very diversified approach and to reduce the volatility as much as possible.
Yeah, I think that for a 100 million allocation, going to the self-custody can be a little bit risky, and especially if you're thinking about transferring wealth across multiple generations, this is where friction can appear. But I would lean towards having an institutional custodian like Coinbase, like Fireblocks, where you are sure that your Bitcoin will be safe, and of course having some self-custody, because especially in the macro situation we are living, having some Bitcoin you can move around the world without the need of asking to any permission. For me, it would be the right way to go. And of course, to that Bitcoin where you are custodying, adding some legal wrapper, having a fund, having SMAs where you can definitely do something on top of that Bitcoin is the thing that would make sense to me. Treasuries like MicroStrategy, for me, are like more volatility products, hedge fund products where you can do like hedge fund trades on top. But I would prefer to have exposure to the underlying asset directly.
This is an interesting dynamic because, well, we have Rony's approach, which is more like self-custody, I believe, and having control of their own keys. But as we move forward, there's one aspect that Richard mentioned, that is when you have Bitcoin and you have it custodied by somebody else, then it's easier to use this Bitcoin as collateral and then get credit on top of it. Whereas if you have it yourself, then because of KYC and other stuff, it's harder to do so. So because of this situation, how do you see the future of custody in Bitcoin because of this discrepancy between having your own Bitcoin, but then lacking the credit part, but having the sovereignty, versus having the credit part and lacking the sovereignty? Any maybe fight that we can have in there? Because I believe that this dynamic is happening, and I don't know how this could change. I don't know when, at what point maybe this could make sense to go back to self-custody.
I had a family in Hong Kong, one of the very big tech companies, so it was a single family office, and they had treasures just lying all around the office, and one of the employees ended up stealing some of the Bitcoin. So it's quite a difficult thing, especially when you get to a family office of significant size where you need employees, where you're like, well, how do we actually deal with the self-custody when you've got employees? Now, obviously, he hired the wrong people, but when there's that much money sitting in front of people, there's a lot of people that sadly, make bad decisions. And obviously the guy got caught, so it was a bit of a ridiculous thing to try and attempt. But yeah, that just makes the case, unfortunately, when these offices get bigger and with more employees, that they end up being forced into a centralized custodian, unless they can be more like Rony or the guy that I mentioned who has the flats all over the world, where they just feel a level of comfort with self-custody and doing it themselves and educating each of the family members, because that's also a responsibility, right? Are your kids old enough to be able to deal with the fact that they, are going to be able to get access to something that is truly sovereign, a bearer asset worth, millions, tens of millions, hundreds of millions, whatever it might be. So it's definitely a challenge, and it's not a straightforward answer, and every family is different, like every individual is different.
Well, what do you think, Rony? Because your family has been through a few different events, so I wonder if something like this happened again, this could maybe move people back to self-custody?
Yeah, let me just, continue on Richard's statement. It depends very much how you allocate, your cash flow, the cost of living and your investments and everything. I believe most family office won't go 100% into Bitcoin. Probably you start with a small allocation, then over time you're moving up. So the Bitcoin are not responsible for paying your daily life. I guess there's, income from property rental. There's probably, a stock portfolio, an art portfolio, and, some more income streams. Meaning, if Bitcoin, is a long-term store of value, generational value, I personally would feel very safe keeping it in a Swiss custodian for the time being, until Richard convinced me the other way. Thank you. And I wouldn't really go into this self-custody, even though this is the main property of Bitcoin. But self-custody carries a certain risk, especially for people who are a bit more visible in this world. We know from France there's a lot of hijacking happening. You know, I mean, we're talking about Bitcoin today already. You know, if the wrong person is listening to that, you know, and I'm walking out of that building, what's going to happen? Nothing will happen because it's sitting in a Swiss vault. You know, and it's not, it needs a lot of people of the family to get those Bitcoin out of the vault, not only me. So that's very important to consider. Yeah.
Very interesting, Rony, and I will add something. On top of violence, I come from Monaco, and previously I was in France. It's a bit shocking what is happening in France, and what is important is choosing your jurisdictions. Why I'm in Monaco? I'm in Monaco since 20 years now, but I feel safe in Monaco. It's very difficult to come in. There is AI face recognition everywhere. So it's very important where you are a self-custody owner. It's important to choose your jurisdiction based on safety first. On top of that, I would like to share with you a very funny story. 6 months ago, I had a new prospect. It was one of my banking partners that referred it to me because he cannot explain him what is Bitcoin and how to approach Bitcoin. He is 82 years old. And he was asking what is Bitcoin, and I explained in my ways to this kind of profiles like Monaco real estate. It's very limited, it's scarce, it's forever up, it's transparent. So this is a way for them to understand. So he was willing to invest into Bitcoin, but of course it's very important that the operators, the advisors, advise the right way depending on a few criteria, the jurisdictions, the age, the long-term vision of the transmission. That's why I advise him to just take exposure on ETFs or just buying some Bitcoin on crypto exchanges, centralized exchanges, because even if it disappears tomorrow without testimony, we can have a way to get back the Bitcoin. As if he was directly exposed, it will be very, very tough, maybe impossible. So I think at the end, the most important part is to have, of course, multi-jurisdictions and multi-sig. And think about transmission as soon as possible. And when I say as soon as possible, it's now, it's today, because we don't know what will happen tomorrow. Maybe we will have a supply shock, and the day we will have the supply shock, I believe the violence will be much harder. That's why it's important to be safe and to be very diversified.
Quim?
Yeah, absolutely, and I agree with those plans because things can get tough pretty fast on that, and we've seen a lot of bitcoins lost in keys that never got recovered.
You also live in Barcelona, which is
yeah,
risky.
I also live in Barcelona. For everyone here, we can go out to the street and nothing happened yet to me. I don't know if it will soon. I hope not. Coming back to the credit part, I think having some part of Bitcoin where you're able to lend as collateral and get cash that you can use for some types of low-risk strategies is something that also makes a lot of sense in a diversified portfolio. So I think that when you're holding Bitcoin, the idea is to build multiple layers, as many of you said, on top. So you can use part of that Bitcoin as collateral to get some USDC, USDT, and go on a market neutral strategies, delta neutral strategies where you can get some yield on top. You can do basis trades, you can do funding rate arbitrage, you can do options with that Bitcoin. So you need to build multiple orthogonal legs to generate some yield on top and make sure those Bitcoins are earning some Bitcoins because it doesn't have any cash flows in it. And I think that credit part that you can definitely do with Bitcoin is something that is part of a diversified strategy.
Let's continue with you, Quim, because I wanted to talk about Bitcoin and yield, because one of the first questions or the first topics that come out when you have already convinced somebody to get into Bitcoin, the second thing they ask is like, okay, how can I get some yield out of it? Mostly if you are, for instance, like running an accessory company, is one of the things that they usually try to go for, because of course this makes the strategy more resilient over time. So maybe you can continue with this, because there are ways to make a yield on Bitcoin and over Bitcoin. So maybe how do you go about explaining this to maybe potential clients or stuff?
Yeah, absolutely, and we are doing this with one of the biggest family offices in the country. So one of the family members really got Bitcoin, and it really went to, I need to get as much Bitcoin as I can pretty fast. So we design a way to accumulate Bitcoin systematically, because generally we see that family offices get, okay, I want to get 1% of Bitcoin exposure, 2, 3%. How do I get there? Should I go all in? Should I start DCAing? How do I get this allocation first? And then when they're sitting on that Bitcoin, it's like, okay, what do I do now? Should I only hold it? Are there ways to generate yield on top? So we are seeing that this is products that are having an increasing demand, and especially after the launch of ETFs, we are seeing asset managers seeing on top of billions of Bitcoin, and right now we are seeing that some simpler strategies are starting to appear, like doing covered calls on Bitcoin, so you can generate some yield. If done properly, you can generate Bitcoin yield. But we are seeing that options are especially a very interesting financial instrument that can be used to generate yield. And then hedge funds are starting to leverage derivatives, cross-exchange arbitrage, funding rates, like a lot of different setups to get that yield. And it's doable to get between 5 and 10, a good year 15% yield on Bitcoin. The thing is, for family offices with a 20, 30, 40 time year horizon, that compounds into very, very big amounts of Bitcoin. And it's
Richard is fighting the urge to say something.
Yeah, I got to jump in on a couple of things there, Quim. First of all, I would say if you're targeting 15%, there is risk, very heavy risk embedded in a strategy like that. With our fund, we take a number of those strategies and put them together in a diversified portfolio to really drop the volatility. So we target 3 to 8% with various different strategies across basis, volatility arbitrage, statistical arbitrage, and a bit of over collateralized lending. We have significantly reduced DeFi exposure within the portfolio post some of the issues that have happened recently. I would also say do not do covered call overwriting on Bitcoin, because to the point that we made right at the beginning of the panel, we are getting to a point where you're going to have an exponential price increase and you won't get that Bitcoin back. So for anyone who doesn't know what covered call overwriting is, it's literally just on a programmatic basis selling either 2-week to 1 month to 3 month calls on the top of your portfolio with higher strikes. So for example, today we're at 81,000. You might sell a 100,000 1 month strike call. If it goes to 110,000 in the next month, you get exercised at 100,000. You've lost the Bitcoin at 100,000. You need Bitcoin to come back down to be able to buy it back profitably. You probably only made 1, 2, 3% on the premium, so your cost basis out of Bitcoin was 111, 112, 113,000. So what I was saying at the beginning, with all these products and all these sovereign states and all these individuals and family offices waking up to what Bitcoin is, and the work that Sailor's doing is just going to have the effect of pulling more and more retail in, because effectively, how do we get 80% of the NPCs that still don't understand Bitcoin to get involved? Well, it's number go up, right? Number go up is what attracts them all. And so we're going to get to that point. You're going to get a blow off top, and it could end up being that we don't ever see 110,000 again. We go straight to 250,000. That's the difficulty that you're looking at in terms of this very inelastic supply. So trying to have these programmatic call overriding programs that we have in the traditional finance space is something that I would strongly recommend against in Bitcoin, with just what we can clearly see coming on the horizon.
Yeah, absolutely. And to support what you are saying is there's a strong, I would say there's a lot of family office money on the sideline at the moment. How can I justify that? I'm tomorrow flying, actually tonight flying to Rome to a big family office day. organized by the Emiratis, inviting European family offices, and then in 2 weeks' time I'll be in Geneva and I will be in Frankfurt. And there's a big demand from that side to understand this asset class. That money hasn't been deployed yet, and once it's deployed, you know, it's going to be locked. It's going to be locked in for generations. So it's exactly what you say. You know, you might take a risk by optimizing your return through leveraged products, and you might get wiped out. And I'm talking out of experience. So I would really be more on the conservative side, get into Bitcoin, study Bitcoin, you know, ask questions and build up a solid portfolio, maybe sell some property, sell some other investments for Bitcoin, and over time you will be fine. And you sleep well, by the way. Bitcoin lets you sleep very well. You become very quiet. You've got a lot of time for your family and for your friends, for your hobbies, for your creativity, you know, for being a human.
Very quickly, in Monaco, maybe most of the family offices have zero exposure on Bitcoin today. And what is happening is Switzerland is one of the first countries to democratize it and to get into Bitcoin exposure through an institutional level. But it's slowly evolving. But it starts from first stage, it's ETF exposure, and also now asset managers and family offices are exploring the yield distributing shares, such as Stretch for MicroStrategy, which is a share that looks like a bond, very low volatility, but very big yield, 11% per year. And this is something appealing for investors, for clients, and this is something easy to manage as family offices.
Just one question to all of you to close this panel. Thank you very much for your opinions. But I just want to get a number from you because you spoke with you speak with family offices. Some of them are your own, but you speak with family offices, and I wonder by 2030. Based on your conversations, what percentage of exposure to Bitcoin, not only like Bitcoins of custody, but maybe Bitcoin, maybe preferred stock that is also exposed to Bitcoin, what percentage of assets in the portfolios in these family offices is going to be invested in Bitcoin, do you think, in your view, in the next maybe 5 years? Maybe Richard, let's start there.
God, that's a finger in the air number. I don't know. I think it's going to become much more important as part of portfolios. You know, you've already got Fidelity and BlackRock saying 3%. So as we go closer to $1 million and, you know, 2030, I definitely expect us to be at least at $1 million. Then that proportion is going to get bigger. I don't expect people to be trimming, and to Ronnie's point, they lock it away, they forget about it. So 10, 15, even 20% of portfolios. And replacing gold. I mean, like, we all know gold is just completely inferior to Bitcoin. I'm sure many of us have even had experiences to validate that and underline it. But yeah, I think 15, 20% is viable.
Yeah, I was quite surprised. I had a meeting with UBS 2 weeks ago. They were inviting one of their probably the biggest entrepreneurs in their clientele, and also some family offices. And before that, they did a survey around the world within their client family office base, and we were all surprised. 25% of those family offices already have digital assets, not only Bitcoin, of course, but that tells you something. There's also a generational transition happening, you know, younger people of the families taking over the decision making. So I guess we're gonna get to probably between 10 and 15% of the total family office allocation by 2030, I can imagine.
Nice. Sasa, number?
Yes, number today, it's 5%. In 4 years, I believe the 5% will evolve organically into 25% at least.
Nice. Kim, finally?
Yeah, and after what Bank of New York Mellon said in its last report, 1 out of every 3 family offices has exposure to digital assets, and from their survey, 60% states, but also EMEA, Asia Pacific, the exposure was 7%. The number is very surprising because when we talk to family offices here in Spain, it's closer to 0. So I'd say it will be very bimodal. We will have the right tail that will be in 15, 20, 25, 30% families that will have understood what this is, but we will also have family offices that would stick to real estate and still be at 2-3%. The distribution will be very, very different in the following years, but definitely we will see a few that will start having a much, much higher exposure.
Okay, well, thank you, everybody, and a pleasure having you here. Thanks.